Everybody, it's Brian Shannon from alphatrends.net. Today's Thursday, the 14th of April, and the market is closed tomorrow for Good Friday. So let's take a look at this market. It was pretty red across the board, except for oil, and the Russell 2000 was slightly higher, but still down pretty good for the year. So let's take a look at the charts. And I'm going to start out actually with Bitcoin because I always forget to mention Bitcoin. Here's the daily chart of Bitcoin. And what you see on here are a number of volume weighted average price levels. This orange one is the year to date volume weighted average price. So that tells us the average price that that Bitcoin has exchanged hands at is about 41,500. The volume weighted average price from the low over here is right in that same area as well. So basically, on average, the average long participant in Bitcoin is losing money. We saw the move beyond these volume weighted average price ranges, which we'll talk about in a moment, and past that 45 level. And then, of course, we had the Miami Bitcoin conference that kind of jinxed it. And 2 years in a row, it was buy the rumor ahead of the Miami event and sell the news because it's been lower since. It's looking pretty vulnerable here, trapped below those two volume weighted average price levels. These other ones over here are derived from the weekly chart. And on the weekly chart, what you see is, again, the red one is from the all-time high, the black one is from the 2021 high, the green one here is from the 2021 low. Below that, we've had this volume weighted average price from July of 2020 hold as support on a closing basis, and that's now down at about 38,000. It seems like that's going to get tested very soon. I'm hoping that we test the volume weighted average price from April of 2020. That's down closer to 35, and then from the low of 2020, we could see this down near about 32,000. So I think there's a lot of risk in Bitcoin, and that leads us over to the S&P 500 because there's a lot of risk here as well. We are holding on the volume weighted average price from the low of this year. You can see that we came down and tested on Tuesday, held above it on Wednesday, and came back down to it Thursday. As we spoke about last week, the 50-day moving average, that green line in here, is now declining because over the last 3 days, we replaced these 3 days. That was basically day 51, 52, and 53. Those drop off, and this is now day 50, 49, 48. So we get rid of this data next week, which means if we're still below this level, then the 50-day moving average will continue to decline because this data is lower than over there. So we're hanging really on a very precarious area here with this level. And if we look at the 15-minute time frame, you know I always talk about the direction of the 5-day moving average. If we're below the declining 5-day moving average, it's guilty till proven innocent. We get rallies, but we don't trust them. In fact, 3 times in the last 2 weeks, we've come up exactly to that declining 5-day moving average. If you don't have this on your charts, I have no idea why, but you're looking at things kind of blindly here, in my opinion, because it's been the exact turn point within 5 or 10 cents, let's say, in the S&P 500 here for the last month. And if you have that, then you know that you can short as it moves away from that level with minimal risk. So next week, I think, if we see that we remain stuck below the volume weighted average price off of this recent peak, we're also going to see that the 20-day moving average, that blue line in there, that's going to start turning lower on Monday because we're going to get rid of this data. And then on Tuesday, Wednesday, Thursday, and Friday, those 5 days get replaced, and the 20-day moving average will start to look like this. And then we'll have a declining 20 and 50-day moving average, and also below the 200-day moving average. And it makes it pretty likely, I think, that we come down eventually to the volume weighted average price from the COVID low. Now that's now at 385. That's much too far away to really consider as realistic for now. But the fact is the sellers are in control of this market. The NASDAQ, same story. Where did we see the high this week? And you're telling me you don't have a 5-day moving average on your charts? If you're an intermediate term trader, you're out of your mind for not having it there. The daily time frame, we're stuck below the declining 50-day moving average. We've got a declining 20-day moving average. The volume weighted average price from this year's low occurred in March, and we're below that and it's declining. We're below the year-to-date volume weighted average price. It sure seems likely to me that we're going to come down and test the volume weighted average price from the COVID low. That would bring us down towards 320. It doesn't mean it's going to be a straight line down there. As Linda Bradford Raschke says, the markets do the most obvious thing in the most unobvious way. In fact, what we often see is, we see these false moves, and last week we were questioning, was this just another failed rally attempt? Well, right now it sure looks like one because we're significantly lower from that level. The risk is to the buyers in here. The stocks are, for the most part in downtrends. I was, just talking on Spaces on Twitter. Look at all these former leaders people are still trying to find the bottom in DKNG, in FFF, in Fiverr. They're just in terrible downtrends. And if they don't scare you out on the way down, they'll typically wear you out in Pinterest and in PayPal. These are not a bargain. They are, headed for a test of their prior lows, they look like. TDOC, it's in a terrible downtrend. Roku, a previous huge winner, now just a piece of garbage stock to own. Upstart, same story, down at new closing lows for the year. It's just these stocks are avoids at best. Starbucks, same story. Good company, who cares? It's a terrible stock. Why own it? SE, good company, so what? It's a terrible stock. Don't own these stocks. Wait for them to undergo the accumulation, and you're not going to buy the low, and but you're going to have time at your back. You're going to be able to leverage time to your advantage and have the wind at your back. So, we saw that oil was strong this week, and it came down exactly to where it was supposed to. I posted this on Twitter at the beginning of the week. We first saw the volume weighted average price off of the May low. The prices came back May of 2020. We handed off a VWAP there. It tested here, it tested again. And then just last week, I'd pointed out, hey, we're getting close to coming down to this volume weighted average price where the last handoff occurred. When we have what we're looking at is each candle here is 2 days. Let's look at it as 1 day. Look at how it came down precisely to that volume weighted average price level, and the buyers came back in and took control. They don't care about the Strategic Petroleum Reserve releases. The trend is higher there. This stock, SE, doesn't care about the fundamentals. The prices are heading lower, and that's all that matters. Semiconductors have been the disaster lately. As we've noted several times, they are the ones who brought us to this dance, and now they are leading us to the downside. They're leading us in a path of destruction. We're at new closing lows. Actually, we're 12 cents off the new closing low for the year. This was through 38.16, I think, and looks highly likely that we're going to test the volume weighted average price from the COVID low. Just testing that low doesn't mean it has to hold. We've previously spoken about the volume weighted average price from January of 2021 and how it held as support for Ford over and over again, and that didn't necessarily make it a buy. Look at how it failed, and now it looks like it's becoming resistance. You've got to be aware of the key levels in these markets. Biotech stocks, they came up to that declining trend line, and they still are in a primary downtrend. If they don't scare you out, they'll typically wear you out. This could be very similar, as I've been pointing out. This move to the 20-week moving average could be similar to the 20-week moving average test it saw here. Look at how long it took for this market to regain upward momentum after that. And it could be, similar to this. The point is, there's no point in buying stocks that just go sideways. That's not what we're involved in the market for. We're involved in the market to make money when the path of least resistance is higher. And if you don't have the skill set to be shorting stocks, then you go to the defensive names that are working well, or you sit on the sidelines and cash. Financial stocks are not helping. We saw that they had started out the earnings season this week, and so far, I don't need to know what the earnings numbers are. All I need to know is we remain below a declining 5-day moving average. They gapped up this morning and they failed. That is not good for this market. It seems like we're headed for a test of this volume weighted average price at the 36-ish level. And as I've been pointing out with this XLF, it looks very similar to what we see in the Russell 2000. That, we have this bigger top, it's broken, and now seems like the financials are headed for a more prolonged downtrend. Energy names up at new all-time highs again today. Not a surprise when oil goes higher. Gold is behaving well. It came out of this pinch. It was formerly, holding below the volume weighted average price off of that peak, and it got back above it. The volume weighted average price from the February low is where we saw buyers on all but one occasion. The other occasion was on this date right here, and that's where it came down to the year to date volume weighted average price. So again, the volume weighted average price off of the February low held it for all but one day, and the VWAP off the peak. Buyers are back in control in gold as well. There's a lot of stocks that look vulnerable to the downside. Otis Elevator is one. I named a bunch of them on a video I did on Twitter this week. Let me tell you something about what's coming up at the end of May in Las Vegas. I'm going to be one of the speakers at the FinTwit conference. Go to FinTwit 2022 if you're interested. Prices are going up here soon on this, and it's, they've only got a limited number of hotel rooms that are really an amazing deal. It's going to be myself and I think about 30 other speakers. A lot of people that you see and know online will be there. If you're viewing this on Twitter, or I'm sorry, YouTube, then please go to my Twitter or alphatrends.net to find out more out about this event. And as always, if you like it, that helps. Subscribe to the channel, leave your comments. I read them all. Thanks and have a good weekend.